The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's make it a great weekend. It's a TGIF. Believe in yourself and in everything you can be. James Garner. Market-wise, let's take a look at it out here. We have the Dow Industrials down 179. You get the Nasdaq down 22. S&Ps are down 17. Gold contract up $2.40, trading at $1,273 an ounce. Silver up 2 cents at $17.13 an ounce. Platinum up $2 at $1,049 an ounce. Copper flat at $2.07 a pound. Light sweet crude down 51 cents, $46.19 a barrel. Bonds, we get the 10-year up 11 ticks, 130.30. The 30-year up a full point, 4 ticks, 166.18. And bonds just won't give it up, folks. They're pushing into the swing. They're pushing in with volume. King dollar. King dollar up 422 ticks, 94.55. The euro is down 63, trading at $1.13. And the yen is down 43, trading at $1.08. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? If we go over to the SPY. SPY's trading down $1.98. You get 70 million shares traded. Now, we're going against 89 million. So this is going to get really tricky right here, because I suspect we're going to get a good 80, and we're at 204.58. So the low of the swing of last Friday is 203.88. That's where we rejected lower price. And the high of that area is 205.77. So we'll see if, in fact, the S&Ps can get a small bounce coming into the close. Because if you don't get a small bounce coming into the close, what you're doing is you're pressing a low. You're not pressing it with volume, but you're pressing a low. And the 3Qs. Same setup in the 3Qs. The difference with the 3Qs is this, that you're at a price point right now of $105.43. The Qs can close over $105.60 real easy. And that is the highs of the lows that it's going into. And we're only at 15 million. So the correlation goes like this. The correlation with the Qs, you're coming in with dramatically lighter volume. That's saying the Qs still want to bounce. We go back to the S&Ps just again so you can see that correlation. So you can see the correlation inside the Qs, 15 million versus 30. It only has to bounce 15 pennies to be on the other side of the higher boundary. So inside the SPY, you're at 204.65. That would have to bounce almost a full point. Gold contract. What do we have with gold? Gold contract out here, folks, wants higher price. We've done 165,000 contracts. You're at 1273. We're up 260. You're in the higher range. And what we've had here also is this, is that you're talking about volume coming in the market all week inside the gold contract. So now if I'm going to put the GLD, and I'll put the GLD up on a weekly, and what you're going to see is that you're actually pushing, and you're pushing highs, and you have some juice behind the move here. So gold, it looks to me like still wants higher price. And what's so intriguing here today is that is with King Dollar up 600 ticks at one point. Right now, it's up 412 ticks. Silver. Silver also basically showed up today. What we have with silver is this. Silver went to a low out here of $16.85. We're now up to $17.13, and I'd really like to see it get inside the $17.21. It's only 8 more pennies, but guess what? That 8 pennies gets you inside the higher range. Now, let's go over to the bond market. Okay, so the 10-year bond, 10-year note, rather, last couple days, it's been trying now for 2 weeks to stay over the 130.19 mark. That 130.19 mark is the highs of April 20th. It did 1.29 million contracts. It got up there May 6th, and it failed. Every day this week it tried to make it. Well, it's going to make it today. And so what that does set up, and here's the correlation here, because this is where it's going to get dangerous for the market. Those bonds want higher price. That is just, when bonds want higher price, folks, the market wants lower price. So this is going to be pretty tricky coming into option expiration week next week. Right now, you're at 130.29. The lows of the high period in this contract, well, in the 10-year bond, note rather, is 130.110. So we're only 12 ticks away from that, the highs of the low. King dollar. We get over and we take a look at King dollar. What do you have at King dollar? King dollar has a decent bounce going. No volume behind the move, but had a decent bounce going. You get 22,000 contracts. You're going into 32,000. We hit a high out here today of 94.84. Right now you're at 94.53. And we'll see whether it can basically, make it up to this next swing. The next swing up there is 94.60. 95.18 rather, 95.18. What we did here today, 94.57. It's going to be a close call, actually. What I mean specifically is this, is that we got over this, it's really not a swing, but we got over the high of the 28th of April. We're going to close underneath, and it does have lighter volume. So we go back to the markets. Oh, Dow Industrials. We got to look at the Dow. Why? Because the Dow has broken the last Friday's low, folks. Okay, so how the Dow comes in with volume is going to be crucial, because it doesn't look like it's going to be an ABC down. But this is, it's breaking with good conviction, actually. 17,580 was the low of last Friday. We're at 17,541, and you're talking the 6th. It doesn't look like it's even going to come close, because when we do take a look at the volume characteristic, right now you're only at 579 million shares. And if we go into the, I believe I said the 6th, 1 second, sorry about that. So, we take a look at this, and what we have is that you're taking the swing point out of last Friday. That baby right there was, come on. Okay, the 6th. So the 6th, we had 970 million shares traded. Hey, we'll find out. If you do not put 970 million shares coming into this close, it doesn't look like we're going to. You'd have an ABC structure on the way down. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 179. You get the NASDAQ down 22. S&Ps are down 17. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down at $167. You get the Nasdaq off 18. You get the S&Ps off 15. Let's go to Alex in Newton. Hey, Alex, what's going on?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I am doing okay. Fighting. First of all, I would like to say that Tiger's Den is the best I have at the moment.
That's a beautiful thing. And folks, come join us in the Tiger's Den. It's
unbelievable. We share. We don't compete with each other.
No, yeah.
We share thoughts, and we help each other.
Right. And, you know, lots of eyes are a good deal.
Yeah. And also about your seminar yesterday. That was absolutely awesome.
Did you see it? That's a beautiful thing, man.
Yeah. And you shouldn't offer it for free. I'm sorry. Okay, so my basic question is about XLU. I want to ask you to analyze my trade, what I did wrong.
Okay, so let's take a look at it. So the XLU, folks, okay, is the SPIDA Utility Select. Okay, so what are you doing with it?
So I went short 1,000 shares
on
April 5.
Okay.
At 49.14.
Okay.
I was stopped out on 300 on May 4th. Then I was stopped out on 300 on May 5th.
Right.
And I still have 400 short shares. And to be honest with you, I thought that I will get 45 easy.
Okay, so let's go through this. So this XLU, folks, okay? And, you know, if you listen to our man, Mr. John Logan, who kicks us off at 8 o'clock in the morning, and you take a look at his profiles, right, you're going to see something that's very unusual. You know what's so wild about this trade, Alex, is that I've been looking at this trade for a while. And so when he's looking at it, folks, this is how this is laid out. Where he's looking at 45, there's no doubt. Okay, so what has happened is that this utilities, they've gone up to highs. They have a high that is out there on April 4th with light volume. And then you came down with big volume. And, you know, on the 20th, you had 26 million. And then on the 21st, you had 32 million. You got the $46. So he's kind of looking for that $46 level. Now, this is what I did, right? So I'm itching also to short this, Alex, right? But let me show you something, right? This is what I did. This sector has been so hot, and it's like, that was the first time down. So what I did is this. Let me show you. I'm going to put the TAS profiles up for a second. So what I did is that I went into the profiles, right? And I says, okay, show me. I wanted to see what was the weakest one, right? And what I do with this, folks, when I want to see what the weakest one, if you know, Alex, he's doing a short-term trading. I'm doing short-term trading. So what I do is this. I says, show me what's below the 4-hour. And what happens with the TAS profiles, folks, is this, is that sorry, here, let me get this up for you, folks. Sorry about this.
Yeah, me. I don't. Oh, now I see that.
Oh, you're going to get it now. Hold on 1 second. I just had, where the heck is this? There's that. I'm sorry. Just give me 1 second here. I'll get this thing straight. There it is. Okay, should have everything now. Sorry about that. Okay, so what I did is this. I brought the profiles up, right? Then what I did is I says, okay, show me what's under the 4-hour. What happens with these profiles, folks, you're looking for, it's 1 hour, 4 hours, daily and weekly, okay? So I kind of did that. And then what happened, Alex, right? There was only a couple equities. Right now you got 2, 4, 6, 7 under it, right? And when I looked at the equities that were the weakest, I says, man, this thing still doesn't want to go down. So I didn't do it. So what I do, and that's why I like trading the NDX 100, because I can do that, you know, with the heavy weighting structure of it. This is a good one to do because there's not a lot of equities in it. Do you know what I mean? So you can do it with this one. I like trading the oils for the same reason, because Exxon and Chevron are so big weighted structure inside it. So what I try to do is that even when I'm doing an ETF, I try to get inside the ETF and say, okay, what's strength versus the weakness? Do you know what I mean?
Yeah.
So I hope, you know, so that's kind of the answer that I'm going to give you.
XLU, they have like 17 equities only, right? And AES weights approximately 15%, like it was with Apple in QQQ.
Yeah. Yeah, that's why I love trading the NDX. I mean, because between Apple and now you get the new dogs in the NDX, folks, are going to end up being Google and Microsoft, basically. Amazon's coming up the rear. Google's almost as much as Apple right now. And as we're talking here, let me just switch gears. If you want to see something wild, folks, so all the filings had to come out today, but I know most people know that Icon had sold his shares, but now you know right where he sold them. He sold them on the 27th, 45 million shares. And, of course, that's when Apple came out with its numbers. It gapped away. It gapped down to $95. And guess what? You know, all these filings out here today, Apple has a big problem, man, because it's not only, as I'm bringing this up, you're going to see something here. So you're going to see the top dog. When I changed this is crazy. So the top dog went, there it is, the filing. So the filing was the following day, is 28, 45 million shares gone in one day. But when I look at this, you know what the problem is, folks? When Fidelity starts selling, which they did, huge problem. Fidelity has 156 million shares, man.
We should have a special jail for insider trading. With a swimming pool, with everything.
Oh, yeah, but that's not insider trading. That's just a big operator getting out. That's all that was. You know what I mean?
Do you think they didn't know ahead of time?
No, he sold out afterwards, Alex. He lost. He lost there.
Okay.
Oh yeah, he lost. Yeah. I believe that he bought them cheaper than that, but that was it with him. They came out with that number, it gapped down. He said, "See you later, man." That was, you know what I mean? He got out. Yeah.
So he will be a financial advisor for Trump.
Yeah. Yeah, exactly. Yeah. Seriously.
Okay.
Trump
Thank
and
you,
all
Tom.
his dates, right? Yeah. I give you a break. Yeah. Okay, brother. Hey, we're going to get that XLU, I think, though. I just think it's, it's not, these bonds don't want to stop, man.
I hope I will not stop out again.
Yeah, you might get a... Hey, listen, if you don't... These should have went to the moon today with the bonds going to the moon, so...
Yeah.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one.
You too, bye.
Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm good, thanks. I'm good. I just want to take a quick look at Vail. I got into it today. I just want to see if you think I was a little early.
Yeah, you're a little early, but that's not the end of the world. Let's take a look at it. So you get Vail, folks. Okay, this is the largest iron ore producer in the world. The low's $2.13. The high $7.40. Iron ore, has been volatile beyond belief. Okay, and hey, just stay there. All right, Dave.
Okay.
We'll be right
will
back.
do. Yep.
Our phone number is 877-927-6648. Dow right now is down 171. The Nasdaq's off 18. S&P's are down 16. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 176. You get the Nasdaq off 19. S&Ps are down 16. And don't forget, folks, every trading day we have live content. Monday, Wednesday, Friday, we start at 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 in the morning to 6 in the afternoon. And you can get all of that right on your cell phone. Go to TFNN.com, hit Tiger TV. You're going to get great HD video plus the audio. We're talking with our man Dave from Boston. We're talking about Valley. Okay, so this is an equity, folks, okay, that went from a price point of $2.21 January up to 626. And what this is all about is what is the price of iron ore going for. And my take on this deal is that iron ore has bottomed in a big way. You're talking about a stock that's trades at $4, but yet they take in $86 billion. So you're not talking a small stock here. So, Dave, I can see why you did it today, okay? Because what's happening here, folks, is this, is that you just had a nice pullback from $6.26 to $4.15. You're coming into the swing point, and you're coming in with lighter volume. And then we put this on a weekly. What you're going to see is that, same setup. He has a high volume high now at $6.26, which he's shooting for. You've pulled back, and he's pulling back into $275 million with 170. So I get all that. Where the problem lies, and this is where it's like it's in the middle of nowhere. Do you know what I'm saying?
Right.
It's like, and what I mean by that, folks, is this: is that when you go up or you go down, it'd be like going up a 3-decker, house if you lived in South Boston or in a city, and as you're going up, you'd stop in the middle of the stairway, and it's like, okay, which way are you going to go? Do you know what I mean?
Right.
So, you're probably going to take a little heat here, but I don't think you're going to take that much. I mean, you could take heat down to 358. I think that would have been, and where I'm going with that, see that 358, that's the low of March 11th, the week of March 11th, and that's a nice sign of strength there, man.
Okay. All right, so put my stop in just a little bit under that. I should be... We'll look forward to see what it does.
Yeah, because if it goes underneath that, then it will go right back to where it broke out from, which is 280.
Okay, Tom. All right.
Okay, man. Have a great one.
Appreciate it. Thank you.
Have a safe one. And the iron ore market in general, folks, if you've ever seen an iron ore mine, it's just picture a big beach. That's what it is. They just scoop it out. And you talk about volatility, man. By the ton, that thing had gone up a couple 100%, back down about 30 or 40%. It's at a space right now that it looks to me like these companies will stop making some money, because if we actually go look and see the contraction that you're talking about here in Val, the contraction is pretty sick. In 2011, the stock was at $36, and 2016 rather, it was at $2.14, so pretty heavy. If we go over and we take a look at the gold market, so what we have out here, let's take a look at inside the gold market, inside the aspect of who was buying and who was selling, okay? What we're looking at out here is this. The latest changes go like this. And wait, this is a mind blower, actually. Because Goldman Sachs is coming out and saying that they think gold is going lower, the dollar is going higher. Well, guess what? On the last get-go, they were turning around buying another 2 million shares of the GLD. You gotta love that. Let's go to Michael in Colorado. Hey, Michael, what's going on?
Hey, Tom, I'm growling and prowling in Colorado. Thanks.
That's a beautiful thing, brother.
I watched your show last night, your special 1-hour show. Thank you for that. That was great.
Thank you for coming. I appreciate it.
One question I wanted to know, I missed out on the February, March, April rally, and it sounded like you had a really solid feeling we were going to get a strong bounce off that February low, and I wanted to better understand your mindset and where we were going back at the February low, because I would have loved to have been in on that rally.
Okay, so let's take a look at it. So I'm going to bring up the SPY, right? And believe the thing that's so weird about that one, Michael, is that I was a bear for so long, and I, shed the bear deal for a bull, and that's the longest I've been a bull for quite a while. So, but here, let me show you what it was, and what it was is this. So you can look at all the indices, but I'll just bring up the SPY, okay? So I can show you, and it had to do with how fast we came down and how we tested the bottoms and rejected the lows. So, are you watching Tiger TV right now?
I am not right now.
Right. That's all right. I'll explain it.
I'll watch it later.
That's all right. I'll explain it. Okay, so you can see. So, and in fact, when you go through the webinar again, what to do is bring up the SPY chart. Okay, because that's what I'm going to do for you right now is bring you through the SPY chart. and you'll see what I'm talking about. So we have a 25-point consolidation, folks, inside the S&P and a 25-point consolidation inside the Qs. They just happen to be the same number. The lows of 2014, I get a weekly up here. So the lows of 2014, we had 1.3 billion shares at $181, okay?
Okay.
We come down and tested those. In August of 2015, we did 1.6 billion. So 1.6 billion and 1.3 billion, right? So now your high volume low that it wants to go after is August of 2015. Okay, so what do? We bounce, we come down, and we test that level. Now we test that level, and we test it with 846 million. So here's the correlation. 846 million. You got to a low of $181, okay?
Okay.
You closed at $190. So this would be a test of a low with lighter volume and a rejected price, okay? You get that?
Okay.
Yep. Okay.
Yep.
Now watch this, and this is why, folks, the bounce was so big. Well, the markets are just you and I and everyone else breathing. Breathe in, breathe out. And it's all about energy. And if the markets go too quick in one way, what ends up happening? You lose the energy, right? Well, what our markets did is that we got this low in January, and that was fast and furious, okay? January 1st, it opened up. It went one way the whole way. I'm saying, okay, man, you're going down to test it, but you didn't build any cause, okay?
Okay.
So what it does, it goes down and tests it. And then you bounce for 2 weeks, and then it comes right back at you. Now, what happens is this. As it comes right back at you, technically, you're going to do the same exercise. And the same exercise was we come into a low. You got to $181. We had 870 million shares traded, right? Okay, so here's the correlation. 870 million at the low versus 846 million versus the 1.6 billion again. There's no more sellers.
Okay.
Okay? That's why I bought that baby. And I was worried for sure going up because of the fact, that I'm bearish, but, that test was on half the amount of volume and we came back so quick. It's like, okay, man, this, you gotta, and you'll see the texture of building cause in the market's a big deal. And building cause is either lay right under highs and build cause or right under lows and build cause. And the way you understand if you're building cause for down or up is that's where the volume is. Okay, brother?
Okay, thanks a lot.
Have a great one, man. Have a safe one. You stay right there, folks. We're coming right back. The Dow right now is down 174. Nasdaq's off 17. S&P's off 16. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down $1.72. You get the Nasdaq off 16. S&Ps are down 15. If we go over and we take a look at the XAU, folks, so what you're going to see is this. XAU is trading at 86.75, and what we're going to see out here, I suspect this week, is that you're going to have the XAU and the weekly pushing into these swings with volume. So at 86.72, you're just in the higher range. The high of the XAU right now is 93.66. The gold bugs index, what you have with the setting up of the gold bugs index, same type of setup. It's in the higher range. We're up 286 today. You're at 221.35, and you know, on the weeklies, that's going to be a nice little setup. What we did have last night, which was pretty wild, just the aspect of that she had to address it, is that Janet Yellen, she had testified a few weeks ago in front of the Senate. She sent a letter over to one of the senators last night saying that they did not expect that they'd ever have to go to negative rates, but if they did, if they had it, they would. You know, that is in the aspect just so unreal just thinking about it. You know, but when you look around the world, folks, what is wild is this. So picture this. Our notes and our bonds today are going higher, which means lower yield, which means if you're in the real estate market or you have to borrow money, it's a beautiful thing. That's the first part. The second part gets more bizarre, though, and what that is that what you have is that the 10-year yield is at 1.7%. Well, 1.7%, when you look on a world basis, is still outrageous. I know that sounds insane, and every time I look at it, I think it sounds insane, too. But every time that I keep looking at this bond market, and then I hear a letter is going out that she even has to address negative rates, it's like, man, is this really going to happen? You know, and it could. There's no reason it couldn't. I mean, it's happened in Europe, so it's like there's no reason it couldn't. And by the way, it's happened in Europe, and Europe basically is not falling apart, but yet it is happening. Okay, so that's game. We go take a look at some of the higher volume stocks out here, and we are going to have a low volume market out here today. Some of the higher volume stocks, what you have inside the S&P, you have NVIDIA. NVIDIA is that's up $5.30. So gaming is on in a big way. I mean, in a big way. You have Citigroup is down 83 cents. You have, let's see, any of the Marbell is down 45 cents. Nostrum is down 6.45. The retailers, well, the big box retailers are getting killed. There are ABC structures on the way down. This is another ABC down. Look at this. This is a disaster, folks. Don't touch this equity. This is a monster ABC down, just as Macy's was. The A point on this is $70. Your B point is 44, so you got $26. Your C point is 60, so you're talking, 20, what did you say, 26? You're talking, oh my God. So 60, 40, 20, you're talking $26, man. So it's 60. 6, 4, 36. Yeah, oh, okay, so it's at 38 right now. $36 is the number. This thing is, you talk about blowing away swing lows, man. This is like, say $34 is a high volume. Now, what has happened also in the retailers. Now, this is a huge heads up, folks. If you remember, and I'm going to bring this up, meaning in the S&P right now, what has happened is this: the retailers are down to the August 2011 swing lows. Okay, that's one whole sector that's down there. Now, watch this when I bring this up, because this is where I think the S&P is actually going. When we bring the SPY up, and I'm going to put this on a monthly. You can think about this over the weekend. This is pretty scary. So look at this. This is sticking out like a sore thumb, too. This is a high volume swing. August of 2011 is the last time that we had any volume, folks. So this high that we've established out here, please get your stops in. If you know anything about the art of time in the trade, when things blow apart, what they do is that they go back to the last place that you had volume. Now, what I like to do, even like when I was talking with Alex from Newton, I've taken a sector, and I like to trade sectors that I know have heavily weighted stocks in, so I can look at the sector and look at the stocks. And then, I can go XO, XO, XO. If they're all bad, good, I'll go to the sector. If it's a 50-50, I might. If I don't know, I don't know, and then I don't do it. What happens when we already know that the trend line that broke inside the SPY is the trend line that started from the August lows, and we broke with conviction. Technically speaking, when you break a trend line with conviction, you go back to the beginning of the trend. Well, the beginning of the trend is $107 inside the SPY, which is a 50% retracement. Yeah. Okay? Now, that being said, now watch this. That's the SPY. I'm going to bring the Qs up quickly. This is a fun program. Crazy. So when I bring the Qs up, what you're going to see is that the last time that we had any volume is the exact same spot. Is that it's August of 2011, right? Now, when you take the Qs, we do the exact same type of setup. Guess what? What the Qs did, and this is what's really cool about the Qs, what the Qs actually did is that they broke down, and then they turned around and tested the top of the channel line with lighter volume. So the Qs have done everything that they're supposed to do in a technical sense after you get a breakdown. You get a breakdown, you get wide price spread, you get accelerated volume, then guess what? You go back and test the top of the trend. And what could drive you crazy inside a channel break is that because the channel keeps going higher, and it can take months to do it, and that's exactly what it did. It took 4 months to go back and test the top of that channel break. Once the test is done, that's done, then it does the rest of the work. Okay, so now I'm going to go back to, you can take any of the big retailers. Go back to Macy's. I just showed you Nordstrom's, and we're talking about where they want to go, and this is about as sick as you get. So August of 2011 and Macy's, the high is $29.44. The low is $22. Macy's just came down from $73. It was $73 in July of last year. And guess what? Now, this is the kicker. You're coming down, you're breaking your B point, and you got some juice behind the move. It hit $30.36. So it hasn't hit the high of the August 11 area. It's a problem. Let me pull up a couple more, because this is a big heads up, man. It's a big sector. I won't even pull up Sears, because Sears definitely did. Okay, let's pull up Dillard's, DDS. Oh, this would be good, because if Dillard's hasn't hit it yet, this would be a shot, because Dillard's is bouncing. Let's see how this is working. Oh, this is a trip. So Dillard's, the high of the low is $54.30. And we're hitting, yeah, it's hit it, 55, 55.21. So Dillard's came from 144 to 55.21. This August 2011, folks, keep your eye on it. That's where we're going in the S&Ps, man. One sector goes, next sector will go, next sector will go. You stay right there, and we are going to come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And as we're talking about August of 2011, folks, check this out. Apple's at $90.51. Apple high of 2011 is 57, and Apple's already inside the $100 price point. Now, the $100 price point is only important in the aspect that it had a range that it was trading from July of 2011. It was at $50. September 2012 was at 100, went back down to 50 in April of 2013. So that's a range. So when you got back in, what happened is that Apple got back in the lower range. Now the bottom of that lower range is $55. That's where Apple's going, man. But what you also have is that that's where the volume is also. And that is what? That is August of 2011. So there's going to be, let me go look at Google because, actually, you know what we'll do? We'll look at Facebook. Because Facebook, there's no doubt, has been on a one-way trip, and Facebook will end up owning the earth at some point unless everyone stops putting stuff on Facebook, but that's never going to happen. So let's just go see in Facebook what we have happening. And Facebook, oh, that's so funny. Oh, Facebook wasn't even out there? No, Facebook had to be out there. Facebook wasn't even out there in August 2011. Is that right? Wow. That's crazy. Does that make sense? Facebook is only public. Let me see this. Wow. Yeah, Facebook went public after that. Lucky Facebook. That's crazy, man. It feels like Facebook's been around forever. Yeah. 2012 went public. Okay, so let's go to Google. We'll go to Google and we'll go to Amazon. So you'll see what kind of hit this thing can take. So we go to Google. Google's $710, and we put this back. Oh, I got to use the other one. Let me use Amazon quick. You got to use the... Okay, so we go to Amazon. That's at $709. Yeah, it's right there. Same deal. Now, the difference with Amazon has that high volume there, but Amazon also has high volume at $348. You know, what Amazon also does have is that you have a high volume swing from the last time we came down in February. That what it would have to do first is this. It would have to... Now, this is going to be cool to see the test on Amazon on a monthly basis. You know, we're still early in the month. Thus far, Amazon has done 52 million shares. You're going to need another 40 million before the end of the month. You have, let me see. So there's normally 21 trading days in the month. That plays out. Calendar. Okay, so we get 5, 10. We only get 10 trading days left. Okay, let me see what they've done then. 52 million. Well, he can do it. You know, we'll see how this shakes out. It can do it, though. Bottom line, you're at highs here. Get your stops in, folks, because with retail coming down there first, I know, dude. Let's go down to the XLE. Let's see what's laying out in the XLE, because the oils are a crucial deal, too, inside the marketplace. I'll bring it up ExxonMobil, actually. So over the weekend, if you want to do some homework, that's the thing to do, folks. Bring your favorite stock up. Bring it down, bring it over 10 years and see what's sticking out like a sore thumb and see if it's August of 2011. So check this out. We just brought up ExxonMobil. The oil's already made it down there, folks. So the oils were the first sector down there. Oil's already made it down there. It's a wild one, baby. Listen, have a great weekend. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it, folks. Everything you need is right inside you. Go have a blast with it, man. Yesterday's gone, tomorrow's not here. What are you doing right now? Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.